Good. Good. All right, good. Ooh, got something interesting to share with you all today. Here we go. I've said this before. I've said I've hit the mother lode before, but this is good information. I think this is important. So look at the Fed funds rate. Okay, today I want to kind of talk about the Fed funds rate and the inflation rate. So the inflation rate is this orange line. Fed funds rate, as we looked at many, many times, is this blue line here. So what do we notice right off the gate is we notice inflation peaked after the Fed funds rate began. Okay, so maybe this is the result of a lagging effect, right? Maybe the Fed funds rate is working, but it's lagging. So inflation peaks immediately, or not immediately, but a few months after. So that's good. So that means that if the Fed funds rate keeps going up, it's possible that inflation actually will keep going down. Maybe. This is a speculation, of course, right? Okay, so here's what's interesting. If inflation goes down, that means things cost less, okay? What things cost less if inflation goes down? Well, a lot of things. One thing are houses. I don't know what kind of language that was. One thing are houses. One thing is houses. Housing goes down when inflation goes down. And that's literally exactly what you're seeing. Look at this monster. Look at this. This is a real estate index fund, okay? This is just one angle of the price of real estate, the trend of real estate. You can look at it a lot of different ways, but here is one good, price action indicator that we can use as a way to sort of chart out the trajectory of what might be going on here. Now, this thing doesn't look too different than all the other indices, right? You see the pre-COVID top, you see the COVID crash, you see the big bull run that happened after COVID. It's just like the same shape archetype as all the other ones, right? But it's different, and the way it's different is its relationship to its moving averages, and that's what we're going to look at. We're going to look at a few different assets relative to moving averages and try to tie those into the story of the Fed funds rate and inflation, because they are affecting these markets in a big way. So let's try to see if we can come up with some kind of thesis about the way these interactions are going on and what they might mean for the future. So if you look at this massive downtrend and you see it relative to its moving averages, you see that this thing has now broke below its 200-week moving average, this blue line, 200-week moving average. And that, once, as you'll see in the other indices, that is a big deal. You don't see that a lot. That's a big deal. And this is the weekly chart. You're closing way below it. You're now getting sucked back up to it. Maybe you're going to retest it. It's a magnet. All the moving averages are magnets. It's all a reversion to the mean game, But we'll see how close it gets. We'll see what kind of strength it has to get here. One thing I'll say about this RSI is that you literally don't have any divergence. That means that this has got other lows coming, right? Because you're going to see a divergence on some of these lows. It might take 2 divergences, 3 divergences, but you don't even have one yet, right? You just see lower lows on RSI and you see lower lows on price. So you have no sign that this trend or this power to the downside is coming to an end anytime soon. Definitely lows to come, right? So that shouldn't be surprising, right? Because inflation, at least according to this chart, has started to come down. So that means that things are coming down in price. And you could obviously make the basic observation that this line kind of looks like the market, right? You know what I mean? It's just this epic bull run that began in March 2020, epic bull run, 5 waves even. You could go 1, 2, 3, 4, 5. You could look at it that way. Obviously, just epic bull run, 5 wave off the COVID low. And now you're retracing since June, right? So off the low, you have just this epic bull run, and then there's just epic pullback. And this is more pronounced than the inflation chart. But the point is, if the Fed keeps raising rates, the housing will go down in price. When the housing goes down in price, we start to see money flowing into other assets, right? That's all it is. So if you look at this overlay, right, and you look at the inflation overlay, you could speculate that in this current environment we're in, we're seeing the market, the real estate market, say, top before the inflation tops, right? I know this is hard to see because of the scale, but watch if I flip it. It doesn't make it any easier. These are just weird juxtaposers. But you know what I'm saying? If you look at this chart, you can see that the peak of inflation clearly occurred after the peak of the market, at least the real estate market. In the top of this is December, literally Christmas Eve, New Year's Eve, basically. This market peaked New Year's Eve. That's right around the time the SPY peaked, Dow peaked, after crypto had peaked, but, right around that peaking time in 2021, right? And now you have this huge downside move. Inflation peaks after that, and then inflation starts to come down. So if this is potentially a bottoming process, then we're going to see inflation continue to come down, right? And obviously, as inflation continues to come down, that allows more people to invest, and then the market theoretically can rise. Now, not all sectors necessarily will. They could. It depends on, how this money is going to get distributed, how much money there really is. We're talking about, well into the tens of trillions of all hundreds of trillions even. We're talking about how much money it takes to move these markets. Is it still there? Is liquidity still there? Well, I'd say it probably is. But if we just take the idea that the inflation, at least in this current cycle, it's peaking after the markets are peaking, then I think it's safe to say you're probably forming a bottom here, like some kind of bottom. I don't know how long it's going to take, but I do think like the capitulation moment of that bottom hasn't happened. But you're forming some kind of bottom here, and that bottom is going to be a pretty important bottom, because it's going to come when the DXY starts a major down cycle, right? So I could be using any index, but all I'm trying to do is draw the relationship between the indexes like real estate, Dow Jones, S&P 500, Bitcoin. They're all right in the same kind of time frame. You draw that relationship to the inflation rate that we're seeing, and then you draw that relationship to the DXY, and you now are making a lot of sense right now. So if the market is leading the peaks, right? It peaks ahead of inflation. It bottoms theoretically ahead of inflation, right? Then you're coming into probably another bottoming phase. Like I said, there's no divergence on this, right? This is not a bottom. There's more downside to come in the real estate market. This is not a bottom here, but a bottom is probably coming relatively soon, because you're now getting to a phase that's getting extreme. So I would say if we go by RSI, we could expect in these major indices to at least see a lower low here, and maybe some divergence setting up. And maybe we're starting to see divergence over in the stock market, where when real estate makes a new low, Dow Jones doesn't make a new low, right? That's easily something that you could expect to see. You could expect to see an inverse head and shoulders setting up here, potentially. I don't even want to say that, because anything is possible, but some kind of retest of the 200, Dow Jones survives above the 200, so it doesn't set a new low, but real estate does set a new low, and then it sets divergence. Then I bet you that is maybe the reversal of this market, and you're going to start to see another move to the upside. And then the market peaks again, and then what happens? Inflation has B leg before a C heart wrencher, because I already said this looks like a 5-wave move. Like, let's just measure that out really quickly. So look at wave 1, wave 2, wave 3, wave 4, wave 5, and then you're going to have ABC correction. Here's where your A leg probably comes in. I haven't even got to the DXY yet. I didn't forget. We'll get there, obviously. But yeah, something like this, right? Market leading this, market ahead of this. But all the while, Fed funds rate is basically going up, right? It's going up. So it doesn't have like an exact specific like on the button correlation, but it's creating a downside move in inflation potentially, if we can speculate that Fed funds rate has a lagging effect on this inflation number. And I hate to say that, like, can I even trust this chart? You know what I mean? Like, they change the metrics on you, but you know what? You got to stand somewhere, right? So I'm going to trust the charts here, but I'm going to say this is what this looks like, right? And so let's go to the DXY, and we can start to say, how is another bottom in the real estate market going to form? How is another bottom? How is another major downside move going to show up in these markets? And it's I think the basic answer is it's going to be the DXY having like an epic blow off move here. I think that's kind of maybe setting up like the DXY is about to do a 1618 because it's so much more bullish. It's clearly in its bull phase, considering it's not even able to press down to its 200 day, right? This red is the 200 day. Look how low the 200 week is. Obviously, some point the DXY is coming down there, right? At some point it's coming down there, but it's not coming down there yet. It has so much comfort just sitting on top of the 200 day that it doesn't even care about the 200 week yet. So I think the key is the DXY needs to move higher to bring the 200 week moving average higher, right? You see what I'm saying? And then still test it later. So you could have a situation where the 200 week is like, coming up here, right? Still the DXY is gonna have to hit it up. So DXY is maybe like setting up for like this kind of deal maybe. So you got to have a big downside move in the stock market if you're going to see the DXY do something like that. And it would still make sense. It's still going to get below, like these lines are going to cross. You're definitely going to have your bearish phase in the DXY, and it's going to get below its 200 week. But right now, it's so far above it that it's probably still got one more big pop in it. And that's going to be your capitulation bottom in the real estate market, probably, right? That will be like something really scary in the real estate market, like one of these like, yeah, this big capitulation move here shows up, and then you see the Dow Jones set basically a higher low, right? And then you start to see, the recovery of like the NASDAQ, right? And it spends enough time below, right? So we'll see. I'm speculating so far into the future here, but you see where the DXY really it's the kicker of the whole thing. And if it's going to have another move up, it's gonna be a ballsy, big, volatile one. And then when you're getting into that kind of volatility, like you're already setting up the divergence, right? Like you're gonna have a peak in the DXY that's gonna make it's gonna go here, right? And then you'll start getting maybe below that 50 level, and then you'll know it's like, okay, well, there we go. Now we're entering a massive ABC correction for the DXY, and it's gonna be a massive bull run in the markets. So in this time here, where are we doing? If my theory has any sort of validity, what I'm doing and how I'm thinking is like this big move in the DXY, it's going to be a beautiful, beautiful time to be shorting the markets, right? Beautiful. So if you can find something that's moving with the DXY, right? You can find any chart. Find me a chart, find me an asset that moves in the same direction as the DXY. Show me that chart. I'll show it to you. I know what it is. Dude, it's shorting semiconductors, dude. It's shorting semiconductors. So this thing is reversing, right? Like this is the short. Like look at this. This is like a bottoming structure maybe. Look how far these prices go. Right? Up down these areas, like 702 on this big structure. If it ends up being like, if this ends up being like a bearish structure here, and then this thing ends up going to new lows, which would mean, if semiconductors go to new highs, which I think is likely. I think semiconductors will go to new highs. It's like there's a perfect bullish catalyst set up to take this thing down to like the 702 up here. So 33 to like 71 maybe, right? I'm not even necessarily, like I would be leaving shares on the table up to that point, but I'd be taking profits like more around these kinds of levels because I'm very cautious that the market is still very bullish and it's kind of hiding a big bullish thing hiding in there and you just can't really see it right now. So I'm still playing that like ultimately I think the markets are going to go to new all-time highs and there's going to be like explosions of money, and that could correlate to Bitcoin's next halving cycle. It could take that long for that to play out. Like when I drew that DXY line, like how long, I didn't even check how long I drew that till. Look at that, May 23, the DXY would go up all the way. That's so possible. That's not even that long. But that would be perfect amount of time for the market to capitulate. Perfect amount of time. Perfect. And in May 23, man, like, that would make a lot of sense for like sort of that new bull cycle to kind of come back in, that final one, right? Or maybe it's not the final one, but you can see how things are aligning for the classic scenario to play out here with the Fed funds rate, where the Fed funds rate comes up, right? And they just do it for as long as they can. Like this rate hike took, 2015, spring 2015, and it really ended, like I said, summer 2019. We talked about that, right? What happened after that? Rate hike ends. They start bringing the rates down and the market freaking crashes, right? It's like, whoa, they started lowering rates, right? Interesting timing to lower rates immediately before COVID. Like, ooh, that's weird, right? Like we've talked about this. Oh, that's classic tinfoil hat, white knuckle. It's like the market crashes after they lower rates and COVID happens. It's like the market and COVID have like a relationship, right? They're connected somehow. And the interest rate shows us that. It shows that the Fed sort of, in a way, they anticipated the crash that occurred in spring 2020, right? They anticipated that all the way in the summer. And then the same exact situation here, the Fed funds rate started coming down leading into the financial crisis, and same with the tech bubble. The Fed funds rate starts coming down leading into the tech bubble popping, right? So this is another one of those deals where the Fed funds rate is on a super intense uptrend here, right? And we have every reason to believe that as long as this thing's on an uptrend, markets are ultimately going to move up, and they're not going to move up in a straight line. They're not going to move up in a straight line. That's what we're seeing. So look how I've drawn this out. It's like the Fed, they can make the Fed funds rate move up in a straight line. That's an artificially manipulated tool. It's why some people are like, oh, ban the Fed. Like, why would you, this makes no sense. You're not letting supply and demand function organically. No, they're imposing this weird little system that they got, but it is what it is. They do what they do. So they can make this basically a straight line. They have the abilities to make this a straight line, and it looks like that's what they're doing. So they'll keep sending this thing up, and inflation will do its volatile cycle. Like you can see how volatile inflation is compared to the Fed funds rate. You have an organic thing that's doing an organic, vibration frequency, and then you have an inorganic thing that's doing a straight line, which that's a manipulated straight line that we can say is effectively manipulated by the fact that they can choose what interest rates are. This is going to be a long upcycle in interest rates, a long, long, long upcycle. And there's going to be plenty of time for a bull market to take place in that cycle, no matter how high this thing goes. Because if you look back here, it's like, look how long they did this for, June 2004 to July 2007, right? Like, This has been going on for like 4 months, 5 months, 6 months. Yeah, 6 months. It's like they're just getting started, and you're gonna see a bull market emerge during that, and it's gonna come out of this epic volatility, and that volatility is because the DXY is gonna keep rising, and it literally makes no sense other than the simple fact that the DXY is measured against other fiat currencies, and it's the best fiat currency. And right now, fiat currency is in a bull market, but soon it's about to be in a bear market. It's about to have a blow off top. Fiat currency is about to get crushed. It's about to get crushed after this. It will have an ABC correction. It will continue its massive cycle, but it's gonna get crushed for a good long while. And at least in this just line that I drew, you start to see the acceleration of this downtrend in the summer of 23. That makes a lot of sense. So you want to make money on this move. And how are you going to do it? Well, one that I like is the shorting the semiconductors. Think if the DXY is about to have a 1618, semiconductors might have a 1618 or elite or around a 702. I don't know. I'll be taking profits the whole way. These are like doubling your money on this Fibonacci is like not too complex. Not too bad. And this is a move that could take a while, It will come in waves. But the thing about this is like, even on this chart, if I'm being objective, right? And this is why looking at the inverse charts is so good, because you can be objective, because you make money either way. It doesn't matter. Is you got to look at this this made a new all-time high or an all-time low, right? So if this chart is now poking above, it basically says that it's got a long way lower to fall. This thing's still in a bear market. This SOXS, which is the inverse semiconductors, is in a bear market, meaning semiconductors are still in a bull market. But we're about to have a massive, massive move to the downside in semiconductors. So you short them, and you get the meat of that move. And I think it's setting up, and we're going to check in on the white knuckle, and we're going to see this is one. This is not the only one. You could literally just short, the indices too. You can short this. You go TZA. We already talked about this. This thing, is this thing in a super bullish trend? I mean, it's not a super bullish trend, but maybe a short-term bullish trend, right? So that's what I'm saying. You can tell that the market is hiding a big bull in it. This market is going to go higher. Real estate is going to go higher. There's too much liquidity. It's like inflation. It doesn't move up in a straight line. So the markets don't move up in a straight line, right? The Fed is trying to use their tools to try to control inflation, but they've already whacked it out, 6 ways from Sunday since, back in 2008. They've lost control of this thing. But good news is they keep raising interest rates, and we start to see this inflation number move to the downside. Well, that's going to move the chart. That's going to move, the indices. That's going to move cryptos. That's going to move things to the upside. It's just another cycle. I don't think it's the end of the realities yet. I think that's still coming. I still think people who think this is like the end of a giant cycle, I don't know if I feel like that yet. You know what I mean? Like Pluto's still got some more time to work on us, right? It's not done. It just got here, right? The Pluto stuff just started coming. So the whole ending cycle, it's got maybe 4 years potentially of window, which is about how long they raise interest rates before they lower them and then the market crashes, right? That's just my whole point of everything. So yeah, all right. Good.